Okay.
Okay, perfect. Hi, Todd. I've known you for almost, I don't know, 15 years, maybe, probably.
It's been a
And
while. It's been a while.
you have helped me with my first house, my second house, and then my investment properties. And then hopefully we continue working together. So I am so delighted that you are giving your useful time to us today and sharing your wisdom with some of my physician colleagues.
Okay, well, great. You know what? You're right. It's been a pleasure, both you and your husband. And, I use your story quite a bit actually this past year because you came to me at the beginning of the year and said, you know what? I want to be an investment buyer and I want to buy 5 properties by the end of this year. I mean, I think you even had your email set up to be 5 or something. And then you end up with 7. So
Yes,
congratulations. And
yes.
what's
Thank
good? I
you.
think it's all been working
Thank
out for
you.
you the way you expected, right?
Thank you. Thank you. Yes. So I got inspired by, just a little bit about medicine. It's becoming, I mean, yes, we do it. And I'm sure a lot of physicians will would echo that sentiment that we do it because we love it, we're passionate about it. But sometimes there is this fatigue, the physician fatigue. So you obviously cannot run forever. So you want to find something which may help you with retirement. It may help you with as a side gig. It may help you as a, partial income. So that was the goal. And I came in touch with a couple of friends who were doing the investments slowly and gradually. And I take it upon myself this mission that I need to dig deeper. And you have been valuable. You have been valuable in terms of not only educating me means and measures how to obtain the real estate properties, but also kind of handholding me at several steps. So thank you. And I would like to say that if you really want something, it's doable. All we have to do is just put our mind and complete focus into it, and nothing is unattainable. Now, even though the real estate market right now is not doing the greatest, there are speculations. They're saying whether it's going to go up. The interest rates are still high. Although I recently saw that the interest rates have, gone a little lower, but we don't know where it's going. But I still feel there's hope for investors like me and my colleagues and friends who are willing to practice in this. So I would love for us to dig in deeper and um, go over some questions with you. But you can ask me something before I start diving
You
in
know what?
and asking you
So,
questions.
and one thing you left out of the equation, why this is also important, it helps with taxes.
Yes, yes, absolutely.
Taxes.
Absolutely. Absolutely.
Tax exposure. But
Absolutely.
I mean, how has it been taking on these properties, being a landlord, managing numerous units, different types of properties? I think you've kind of restricted yourself to single family and duplexes and townhomes and things, I believe, right? But how's it
Correct.
tough for you?
So it's not easy. Everything has a learning curve. I'm learning fast.
Mhm.
But so far, everything is rented out. Everything is
Awesome.
cash
Awesome.
flow positive. Everything so far is no delinquency.
Okay.
So I decided not to stick with the property managers, and I'm not saying that's the necessary advice. I'll give
Sure.
it to all my colleagues. That's just something I decided because I did want to work genuinely and properly towards this REPS status, which is called Real Estate Professional Status, which does allow you some sort of tax relief. So I am still working towards it, getting enough hours,
Sure.
doing the work myself without any property managers. I have discovered great apps which help you manage the
Oh, that's
inflow,
awesome.
outflow,
Awesome.
repairs, maintenance.
Awesome. You have to
Um,
share.
100%. Whenever you're ready to buy your property, Todd,
That's
I'm
awesome.
right here.
That's awesome.
I'm right here. Yes. Yeah.
Also, I think
Um,
it's interesting too, if I can real quick, is, you made offers on properties, and when we got the valuations, you did really well with what they were appraised at. So even if you argue maybe the market's a little soft, you left yourself a good cushion. I don't know if you at some point can elaborate on kind of your strategy for making offers and how
yeah.
that for you and how to be okay to say something, to turn something away that may be
Yeah.
a bit emotional, but you knowing the understanding is to build your wealth, right? And make this a
Right. 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 So equity is a big thing. I am aggressive when it comes to negotiating. Some strategies I developed with time is I I should have taken a real estate license myself and just contacted the seller or a realtor. I am still in the process of it. There's a lot of work involved. Um, but what I would do is I would go to Redfin or Zillow. I would contact the seller's realtor. I did not have my own realtor. I would contact the seller's realtor. I would see that the property has been there for a while. Like I'll choose
Mhm. Sure.
wisely. They're kind of getting desperate. They're lowering the price. I'll see the trend, where
Mhm.
they're heading, and then I'll make an aggressive offer. But the way I would make my offer was useful because I would say no mortgage contingency, cash
Mhm.
only. Although I was not planning to do cash only.
Right, right, right,
You know
right.
that, right?
Right, right, right.
I don't recommend everyone to do that, but there's means and measures around it. So there's you could fine tune your style. I would always say fast closing. Thanks to you, you would always close on
Sure. You want
time.
that? Yes. Hmm.
I said no mortgage contingency, cash only. But if I had to have mortgage contingency, I'll do that. I will make sure that the property seller is kind of a little desperate to sell.
Sure, sure.
I would also tell them that I will send you a high escrow or earnest money deposit
Hmm.
because that would give them confidence. So, for example, if a property sale is for 400K, I would send them 90K
Sure.
EMD.
Yep.
So that gives them high confidence that
Yep.
this person is serious, even though her offer is really lower than the market price or the
Sure.
other, but she's serious. This
Yep.
deal is going to happen. If this doesn't happen, she's losing a lot of money. So she's not
Right.
going to back out. So
Right.
that's how I used to structure my deals.
Mhm.
Time sensitivity, aggressive offers,
Yep.
sounding very serious, knowing your
Yep.
business. As you said, I honed my own email,
That's right.
which sounded very legit. Like I didn't, it
Yep.
was not like a at yahoo.com or at
Right.
gmail.com.
Right.
I had bought a domain.
Right.
I made it
Mhm.
legit. I made it serious. Um, and then and then the rest was you. Rest was building the right team. Honestly, if you have the right team members, a good title agency, closing company, a good mortgage lender like you, a good attorney. I would love to
Sure.
involve Amanda, my real
Sure.
estate attorney. She's
Sure.
really amazing. I would love to have her on board too. So, yeah, it's just building your team right is what matters in the end.
Well, again, I've told you many times, congratulations on a great year and accomplishing these goals you set out and actually exceeding them by quite a bit. So I'm
Thank you.
impressed and thank you for letting me be part of the process, of course.
Thank you,
And my
Todd.
friendship with this process and relationship as well, it seems. So that's awesome.
Likewise. So I do have some questions for you because I think I might have some answers, or not all the answers, but people who are listening to us would want the answers. So um, tell us a little bit about how you think a person can be given mortgage, debt to income ratio. What do you look at? How a person who's looking for mortgage can make themselves attractive and make it the deal easy.
Sure. So, just quick on my background. I've been doing this for 30, January is 33 years. And I started at Wells
Wow. You
Fargo.
look young.
I
You
know.
look 33.
I know. I look like a
You've been
baby.
doing it at 8-0.
Great color and coloring here.
Yeah.
So, 33 years. I started out at Wells Fargo Private Mortgage Banking, where it was definitely a more holistic approach. And I still take that approach. But I work for a company called New American Funding. And all that means is I have access to many investors, not just the one that I was working at. And that's been helpful because it allows me to, have a client start with a pre-approval without pulling their credit, doing what's called a soft credit pull, and then, looking at the whole picture and helping them navigate what are your goals? What are your short-term goals? What are your long-term goals? And then making sure that we're talking about things that actually help them achieve it. By doing the soft credit pull, for example, we can identify very quickly if there's any credit issues that they may not even be aware of. It's not uncommon to have someone have a collection for a phone service that they didn't realize got put on collection, or realize that the balance on their credit cards is a little higher than we would ideally want. And by paying down the credit card, I can do what's called a rapid rescore. And all that means is that you're getting a new credit score in 3 to 5 days. in lieu of having to wait 30 or 45 days for the credit report to update naturally. So that's a big piece of it. So it's credit score is one of the legs. Income. It's not uncommon for physicians to be self-employed, have K-1s, tax returns, as you know. Priyanka gets a little bit involved.
W-2s, yes,
Yeah,
yes.
do the whole thing and see how they're doing their income. With that said, we have options that have no income requirements, depending on your down payment, depending on your liquidity, depending on your credit score. So I found here at a lender that's not a bank, by having all these different options and different niches, it has allowed me to facilitate almost all the clients that come to me, even including clients that have low credit scores or have a low down payment need, which is very common as well, both for primary homes, second homes, and of course investments, as we're talking about today. It's
So
a
let me ask you, if you have requirement for no down payment, does that mean that the interest rate is going to be higher?
So if it's actually no income, the down payment would be typically 20%. It depends on the investor. So I just want to back up is we have 24 investors. And to try to tell anyone all the different guidelines for each investor, knowing that they can change their guidelines at any time would be kind of reckless. So I think the place to start again is an application which has no credit score pulled, no credit inquiry, no impact on your credit score, and no cost to you, right? You can apply, and being here at New American is the first lender I've ever worked at that had this option. Every other lender and bank that I know of does a hard credit pull from the get-go, which you may or
Yes,
may
yeah,
not
some
be
of our,
ready for yet.
yes, yes.
And people get upset because like, I'm not, I'm looking, I'm thinking, but I'm not ready. I'm not ready to go under contract.
Thinking.
Maybe,
So remember when did a soft pull on my credit
yes,
when
this
we
is
started first, I already had like Lennar or some DR
sure, sure,
Horton or some other inquiries because I was just inquiring. I was
sure,
not like buying yet. I was just
sure.
checking and they were all doing the pulls
That
and that was hurting my credit score. So
is correct.
definitely I love the idea that you do a soft pull and not a hard pull on the credit score.
Yeah, we only need to do the hard pull as we get closer to contract. But that's gonna it kind of you look at it as a truly as a consultation. Whoever you're going to work with for your mortgage, it should be a conversation about your goals and needs, and again how to not impact things that you don't want impacted. Want to be the credit score, but also to provide enough information so that that person can help make a good decision with you. I also enjoy personally, and hopefully other consultants enjoy personally, involvement with your financial advisor if you have one, or a CPA or attorney like Amanda, like you mentioned before. I know we've done joint texts and things like that. It's good to have everybody on board with the client's personal goals, knowing that every client's different. That's why I think I say this job 32 years or 33 years now, is that every person that comes to me has a different situation.
Correct. Correct. Yes. And I'm so glad that you customize according to the person who's buying it. So I was at a different need,
Mhm.
and someone who's just starting or finishing their residency or fellowship, maybe in a different need. Someone might be going through FHA loan, or someone like me, like going through an investment loan. So tell us a little bit more about different types of loans.
Okay, sure. So typically there's three collateral types, right? Buying a home for you to live in, buying a home that you're not going to live in all year, but you intend to occupy part of the year, a vacation home, if you will, and a property you're just truly looking to rent. It's just totally going to be an investment. Maybe you're going to flip it. Maybe you want the return of the rental income and then you'll sell it down the road. Those are three collateral types. So the down payment options are the lowest on a home where you are going to live in. Why? Because it's the least likely home that you would let go. If something happened that was adverse to your financial situation, you are least likely to let go of a home that you're actually physically living in. Um,
Right.
yeah, so 3% down is fairly common. No down payment on primary homes with certain programs are available. Um, and then something we talked about, Priyanka, as well, where you buy a home, a duplex, for example, where you're going to live in one of the units and rent the other. That is a terrific way
Yes.
to have somebody
So,
offset your payment, and the down payment
yes.
is 5%.
Which
Uh,
is very, very low. So that's
very low.
called, for people who may not have understood this, so that's called house hacking. And I would like to tell a little bit about it. Is
Sure.
y- suppose I am the one who decides to do house hacking. This is my first home. I'll buy a duplex or a bigger house. Oh, I take a loan of, let's say, 500K. I pay only 5% down payment and I don't pay 20% or
Right.
25% or, and I'm completely allowed to or legally okay to rent the other half of the duplex,
Mhm.
generate income, which pays for the mortgage.
Right.
And correct me if I'm wrong, after 2 or 3 years, I'm allowed to continue the loan. But if I want to buy another property, I could do that, right?
Well, so I would say on a primary residence, yeah, there's an expectation of time that you would live there without it making look weird. But I don't know that it's 2 to 3 years. Now, if you're looking to get another FHA loan, then yes, that might be an issue. But if you're like, okay, I lived in certain county and I want to move to a different county, and it makes sense, you're moving up in the home. Or I've even had people who live in a condominium and they were on the second floor and the same unit came up on the 20th floor, which is a superior unit, and it
Right,
makes it make sense. We made that same unit in the building be their primary home, and that happened in under 6 months. It really needs to make sense. It could be for school district, again, a superior view. You're making more money. You're about to have a kid. There's so many reasons why
right,
might change your mind on your primary home that weren't present at the time you closed. So I wouldn't. I think it's a conversation to always have, but there's not necessarily a rigid time frame on how long you must live in that home before you can call something else. If you're relocated on a job,
yeah,
we don't make you wait,
yeah,
a month. You've been
yeah,
located in the
yeah,
in Texas, for example. Okay.
yeah.
Right.
Perfect. Perfect. So yeah, so I couldn't do that because I already had a primary home,
That's
but
correct.
I took an investor loan with you.
That's correct.
Um, so as far as I understand, the rates are higher for investment purposes, and obviously the down payment goes higher too, correct?
You are absolutely correct. So think of things as your own money and risk. Everything is really tied to risk. So the most risky collateral one can buy is a property that they intend to rent. Primary home is the least risky, investments the highest risk, rather, I should say. And so the rate is based on risk, which makes sense. If you were going to lend your own money, you're going to want more return for something that exposes you to more risk. Ways we try to offset that risk is increasing the down payment or potentially doing a home equity line on your current home to help you with that down payment. That goes back to my comment about holistic. I like to see everything kind of as it is and help develop a strategy that helps you obtain the best rates possible. As you know, Priyanka, with some cases you did larger down payments because there was a pretty significant rate difference between a lower down payment on the same property, right? And a higher down payment. And you were choosing which ones to go. Same conversation on buying down the rate. Here at New American Funding, if you buy a home and you need to refinance in the next 5 years, we waive our lender fees and appraisal fees. It's the first lender I've been at that's actually offered this program. But that's terrific because if you believe rates will go down, but you feel like rates are higher today, well, you know what? We have an option where we can refinance you in 6 months, 8 months, a year, based on where rates go, and still get you into that home today. And I think that's some thoughts that we had talked about in your process, right?
Yes.
I mean,
Yes.
there's not a waiting period. If it happens in 3 months, you feel like, okay, it makes sense, then we can refinance you. So that's, I think, a terrific option as well.
Yes. So um I chose not to buy down the rate
Mhm.
because my goal, and see, everyone should strategize according to their
Right.
goals. You could pay 15,000 upfront and really bring down your interest rate because if you're planning to pay that rate for years to come, you should do that.
Right.
My goal at the time of purchase, and I hopefully I'm able to stick to that, was I was going to pay it off. As soon as I have more cash reserves, I will pay off the mortgage and hopefully let the passive income truly be passive income,
For sure.
not necessarily getting washed away with the mortgage payments.
Right.
So that is my goal. And as you said, we could always customize it depending on what's one's personal goals. Now, I do have an important question for you. And
Sure.
I don't think, even though we've had a few conversations, I don't think I ever got a very clear answer.
A
And
trick
today I want that
question.
answer. No, 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 it's not a trick question.
I'm
I
teasing.
promise.
I'm teasing.
I
We have
promise.
fun this way.
I promise it's not. So I mortgaged certain properties, but I did invest in a property which was we call it BRRR, which is buy, rehab, rent, and refinance, right? So it's like buying an undervalued property
Mhm.
and rehab it, put in your money, and then refinance. So I did end up buying one property which requires a lot of refinance. I'm in the process of, I'm sorry, a lot of rehab, and I'm in the process of rehabbing it.
Mhm.
Now, when I make it look stunning, beautiful, I feel confident. For example, let's say I bought it for 400K.
Mhm.
I'm just giving examples. That's not the exact price. Um, and I put in, let's say 50, 60K to rehab it. Now I feel confident that if I send an appraiser guy or appraiser woman, whatever, appraiser to
Right.
appraise the property,
Mhm.
um, it would appraise for easily 550 or higher.
Okay.
Now, if I've paid it down, I have rehabbed it, and the appraisal comes back, let's say 575.
Sure.
Can I come to you and now say, hey, can I pull in cash out of this? Would you refinance? What is the exact term to get
Sure,
money out
sure.
of that property?
Yeah, so two parts of this puzzle actually. One is, let's say you bought a property cash because you just wanted to close quickly, you're comfortable with the property, but ideally you would have done a loan, but to win the deal, you decide I'm going to pay cash.
You would not have financed that loan because that property was in
I
like
understand.
not
This,
in that
this time about probably
situation.
without the rehab first, just
Yeah,
so they know it's available
yeah,
as well, which is you do
yeah.
that. We can cash recoup you right after closing, assuming we can prove it was your money. So, if that's what your situation is, that you have cash and you can pay cash, that may be an option to consider and then recoup it right away. In Priyanka's example, she bought a home that again needed some rehabilitation, meaning it would have been hard probably to get a loan on it in the first place. Okay.
Yes, it was hard to get mortgage on.
Sure, because of we have to make sure that the property in its current condition is livable, marketable, unless you're doing a renovation loan, which is typically reserved for primary homes. Okay, so in your case, Priyanka, there's something called seasoning. Seasoning means when you buy a property, we can't give you the new value until a year. And the reason for this was the housing crisis where people were buying properties, they went up so fast, they were getting money, they were leveraging the equity so fast, and the price, as we all know, kind of became ballooned very quickly. They weren't the real price. So you to get money out without renovations is 1 year, unless you're getting the recap that we just talked about, the recoup. But if since you did improvements, if you can prove that you did improvements, which
Of
means
course.
the construction receipts, we give those construction receipts to the appraiser. They can see how much you paid for the home. They're going to give you credit for the repairs and renovations you did, and now they can help support the higher value. So we can basically lend you more money than we otherwise would be not be able to if you did not have these renovations. So without any receipts, we're stuck for 1 year on the price that you paid for the home, regardless of what the value is. The value went down, of course, we're going to be the lesser of, right? We would be lending on the lower value. But assuming that that didn't happen, we're stuck for 1 year unless the client can show I did these improvements and here's why you can give this value to my home now because I did these things and the
Right. So
improvement count.
if I prove that I did the
That's correct.
before and after pictures
Mhm.
and the appraisal comes back as 575, what would the bank usually or the lender usually do? Is that a 75% of the amount?
Yeah,
Is that a
so it's
full
going to be
amount
loan to value contingency. I think a cash out on an investment is 75%. You're correct. So
of the appraisal value
that's correct.
or of the
Of the appraised
purchase
value.
price?
Yeah, of the appraised
Okay.
value. In your case, where you did these improvements, the appraiser is going to give credit to these improvements, not by pictures, but by the receipts you're showing. I did $40,000, $50,000 of improvements. Whether or not they think the value went to 575 in your example, and you did $50,000 of improvements, would be determined by the appraiser, right? But we can lend at least the higher amount. Okay.
But if you add a bedroom,
Sure. Oh, yes.
that does increase the appraisal value. And that's
That's
why I
right.
feel confident that appraisal value may come higher than what you have put in based on the planning.
Oh, yeah, because you basically made the home you have another bedroom, so now it's going to be compared to other homes in the same area with that same bedroom bathroom structure that you now have that's different than the first time. So yeah, it sounds like you're going to be in a good place. Mhm.
Okay, yeah. So that's kind of a hope for people who may want to invest in underpriced properties, rehab, although it's a gigantic task to take upon yourself. But that's just another, I feel, creative way to generate equity in real estate in today's market. Although it is buyer's market, but as a buyer, it is a buyer's market, so it benefits the buyer.
Yeah, I think really you have the strength, you have the leverage now. I think, and, as you were looking through your properties, you made offers on properties. Some of them, you made offers on a while ago came through later on. So you really were, I think, super happy with some of them. You're like, wow, okay. And the appraisals reflected the fact that you made good decisions here. And even if the market
Right,
goes down some, you're still in a very healthy position with the valuation and the price differential to support that. Plus, the rents all came
right.
out the way you thought that as well.
Yep,
Yep.
yep. Well, that has been my story, and that has been very helpful.
Mhm.
Um, I really appreciate you, Todd, at each step of the way, and
It's been a
I would
pleasure.
love
It's
to
been a pleasure.
continue working together.
Me too. Thank you so much. You've been awesome. Thanks so much to your family as well. Thank you.
Thank you, Todd. Take care.
Thank you.
Mhm.
I'm gonna stop recording, okay? Uh,
Okay.